today we have the CEO of Nestle, Steve here, to ring the closing bell. Can we give them a warm NSC welcome? Nestle was the first company to submit its financials for year-end December 2012 out of 148 companies. Nestle was also the few Nigerian companies that has been included in the FTSE Asia Pan-African Index. It is the index of the biggest company in Africa, which shows the level of corporate governance and of the companies. So again, it's a major achievement for them. So I introduce the CEO of Nestle, Manager Woolnough, and we have another director of the company who is also the finance director, Mr. Martin Kroger. And then we have the marketing services director, Mrs. Uko. I hope I got it right. Let me invite the MD of Nestle to make a few comments.
It's a great honor and a privilege to be here today, mainly because we're very excited to see the progress of the Nigerian Stock Exchange and another mark in the way Nigeria is moving forward in Africa. We find that exciting as a company. We're expecting to see those excitements, and they are turning into trading benefits for businesses. And we're really excited to see the most populous nation of Nigeria continue to set leading examples with the best practices that we see often coming from organisations like the NSC. So we congratulate you for this. We actually hit 100 billion naira for the first time in our company history on November 16th, and then continued to deliver 116 billion naira turnover for year end, which we're very proud of. And in terms of the company's strategy, I think it's well expressed by seeing around 100 billion naira of investment taking place for the company between the years 2007 to 2012. So a very strong commitment to Nigeria. We just opened this new distribution centre 2 years ago, a new factory, and in fact we will be starting work on a third factory in the near future. So we're delighted to be here, and thank you very much for the opportunity. Thank you.
You know, as you were throwing all the ones and zeros, the billions, I was thinking that it would be important at some point if you can come and do the facts behind the figures, so that we also understand what the story is behind those numbers. And I think it's a good thing if it is something you can do.
We're very backward integrated. All of our soy, sorghum, maize, cocoa, all of these products are coming directly from Nigerian farmers. Now, in the case of cassava starch, we were importing around 5,000 to 7,000 tonnes of maize starch. So around 2 years ago, we decided that it was important to change that. And so we invested with the IITA, the International Institute of Tropical Agriculture in Ibadan. And we put a joint project together with all of the stakeholders, including the starch processors, and so that we could do what we call creating shared value. That's where we invest money in like and kind, quite a big project in fact, to help the farmers grow bigger tubers, which is through the research of IITA, and also the best practices on the field, and then with the starch processors to be able to receive those tubers, then to convert into starch, and then to produce starch for us. So it's an ongoing harmonious project, let's say, where all of the stakeholders should benefit, and of course we at the end are able to buy the goods from the farmers, and that makes a very nice circle. That's one example. Other examples are in the north, where we work with over 10,000 farmers in order to develop an improved soy, because soy can suffer from what's called mycotoxin, or aflatoxin precisely. And since 2007, when we were reducing up to 16% of the grains coming into our factory, last year we rejected only 0.05% or less. So with those type of company-supported investments in training, teaching, best practices, we can also improve the lot of the farmers, which means they can sell more product to us, which we can then use to grow the company and to help everybody win. And I think any company that's prepared to continue investing shows its strength. Secondly, it shows our determination to keep pace with the growth. And we're a company that looks forward, not backwards, and we're always looking to make sure our facilities can keep up with the needs of the business. So this distribution centre, which is 17,000 pallets storage capacity, will in actual fact be too small this year. So we continue to expand even beyond what you've seen already, and by 2016 there's going to be again continued expansion, and by 2020 another expansion. And in addition to that, another distribution centre will also be built within that period. So I think it's more important to think about all of these things as a continuation. It's part of a plan, and we're executing our plan. In 2012, we first of all should recognise that January was a pretty difficult start for most of the FMCG companies, because we had the 6-day strike with the petrol strike. And this was a bad way to start for most companies, but I can tell you that we were actually 2% above our own internal forecasts. And that was through a lot of hard work from the sales team, both before and after those 6 days, and a really strong, solid teamwork from everywhere, whether it's our unionised staff. We have a very strong, supportive team of people in the factories, in the sales team. So we got off to a good start, and by end of Q1 we were in good shape. When it comes to looking out for 2013, the same issues are still there. Some of them are getting more difficult, some haven't gone away, and we have to work around those things. And at Nestle, we're focused on making a plan and delivering our plan. If there are things that come along during the course of our business that need to be adapted, then we'll adapt to those things as they come, and we will still work hard to deliver what we promise. Sometimes that means reducing costs, tightening the belt in a proper way, not a silly way, in order to still retain value to shareholders. And again, because we have a very strong, well-led team at all levels, it also means thinking hard of alternative options. How can we go somewhere new that we haven't been before? How can we put a new promotional activity together to tempt the consumer to buy products? So, it's a dynamic business. We're in the food business.